Very good evening, my dear future chartered accountants, and I hope you all are doing really great. You're studying very well for your exams. Okay, so hope that you all have revised what we had done in the last class. It was quite technical and lots of practical application was there. We had also discussed few numericals. So I just hope you all have gone through it. Is it? Okay, so we will now start with the fresh topic. It is not actually fresh, it is in continuation to what we had done in the previous class. That was computation of your drawing power. Okay, so just let's quickly go through what is mentioned there. We have studied this, but still, what was drawing power? Drawing power generally addressed as DP is an important concept for CC facility. I told you when you are taking a working capital loan, this drawing power is important. Okay, it is the limit up to which a firm or company can withdraw from the working capital limit sanctioned. I told you the difference between the sanction limit and the drawing power, isn't it? We had done a calculation also where drawing power was
Recording in progress.
45 lakhs and sanction limit was 50 lakhs. So we will stick to the 50 lakhs, isn't it? We will restrict our limit to the 45 lakhs, sorry. We will restrict our limit to the sanction limit, isn't it? Do you all remember that example or not? Sanction limit was the overall limit of your term loan, of your CC, all the loan facilities that you have taken from the bank. Total of that was your sanction limit, isn't it? Okay. Then different from sanction limit. How come different? Because sanction limit is the total exposure that the bank can take on a particular client, including your export packaging credit, your non-funded exposure, your CC, overdraft, everything, isn't it? So DP refers to the amount calculated on the base of primary security less the margins. We had little margin fixed on debtors, we had little margin fixed on stocks. Do you all remember that? All right, okay. Now, what are the consideration? You have to see that all accounts are kept within the drawing power and the sanction limit. This we had to see. Then the accounts which exceed the sanction limit or drawing power or are against the unapproved security, the securities which are not approved or are otherwise irregular. Should be irregular means the repayment of the loan amount, the principal or the interest amount is not regular with the bank. Okay, so the irregular amount should be brought to the notice of the management or head office. Okay, then what is the bank duty regarding it? Bank should ensure that the drawings in the working capital amount are covered by adequacy of the current assets. That is the margin we talked of, isn't it? Adequate margin should be kept. That is, it should be more than the value of the security, isn't it? Okay. Then drawing power is required to be arrived at based on current stock statement. We had discussed that you have to submit regularly the stock statements, the debtor statement, isn't it? Why the current stock statement? Because you can't rely on debtors. You can't control the debtors. What if the debtors say I will not pay? What will happen? You can't force them to pay. But stock, it is in your control. So you can say that yes, we will take, it is arrived at the current stock statement. However, considering the difficulties of large borrowers, stock statement relied upon by the banks for determining the DP should not be older than 3 months. Means if you are submitting your stock statement for more than 3 months, that is older than 3 months, okay, then we say that that is deemed to be an irregular account. Are you understanding? So you have to see if it is working capital limit, stock statement should be submitted within 3 months. Every 3 months you have to submit a current stock statement, the current status of your stock. Okay, is this clear to everyone? So it says the outstanding in the account based on DP, the drawing power calculated from stock older than 3 months is deemed to be irregular. Is this point clear to all of you? Ma'am, it's very slow. Achal, what is very slow? What is very slow? I can't, I'm unable to understand. Achal, what is very slow? Okay, it's fine now. All right. Okay. So this was important point that you should be knowing, okay? That can come in your MCQ also. That an account is deemed to be irregular if the stock statement is older than 1 month, 1 year, 3 months. So it's a little technical point that you should keep in mind. Okay. Now, what are the auditor's concern regarding this? There are three concerns. Basically, those are your monthly stock statement. Whether the monthly stock statement for the month it is to be audited have been submitted properly or not. Then the quarterly returns and other submitted statements submitted by the borrower to the bank. Quarterly, like I told you, quarter statements you have to submit. Okay, it should be scrutinized in detail. See, when we go for bank audit and we take sample accounts, what do? We ask for the documentation and then we see, are the stock statement attached there? Are the stock statements in the file? Is it not older than 3 months? So all these things need to be checked in detail. Okay. And then the annual audited report submitted by the borrower. See, basic things, if you go to a bank for a working capital loan, they will say, okay, first you give me your audited balance sheet. Okay. So audited balance sheet, why? Because the bank knows whatever statement of debtors or stock you are submitting, it could be manipulated. But when audited statements are kept with the bank, you know that audited means that the value of stock and debtors you can rely upon, isn't it? So three important things: the monthly stock statement, the quarterly returns, okay, and then your annual report, audited annual report, because audited is done annually, statutory audit, isn't it? I told you concurrent audit done monthly, statutory audit done annually. Are these points clear to all of you? Then computation of DP, how did we calculate drawing par? The stock minus margin, the debtors minus margin. So they say it needs to be ensured that the drawing par is calculated as per exact guidelines formulated by the board of directors of the respective bank and agreed upon by the concerned statutory auditor. So it is decided amongst the board of directors and agreed by the statutory auditor. Special consideration should be given to proper reporting of sundry creditors. Why? Because their value might fall, okay, for the purpose of calculating drawing par. Then stock audit. When is stock audit important? This we were talking of bank audit, okay. Stock audit, when do you need to get stock audit done? Stock audit, you understand, you go to the client's place and you do the audit of the stock, only the stock. See, there are different kinds of audit. Revenue audit, where you audit the revenue, the receipts, okay. There's a stock audit where you audit the stock. So here the stock audit, when we say when is a stock audit done, it is carried out by bank for all the accounts, those where funded exposure, you remember funded exposure, where actual transfer of funds have taken place. The funded exposure is more than 5 CR. So if the loan sanctioned is more than 5 CR, okay, then you have to get the stock audited done. So the bank will also ask for the stock audit. Are you all understanding? So auditors can also advise for the stock audit in other cases if the situation warrants the same. They say, okay, even if the funded exposure is less than 5 CR, but the auditor will say no, still there is uncertainty. So you please go in for stock audit because maybe the nature of stock is such that it fluctuates. So they say, please get it done. Okay. All right. Then branches should obtain stock audit reports from the lead bank. Do you remember lead bank? Where we discuss SBI, PNB and Canara. 80%, 20%, 10%. You remember that? 80%, 10% and 10%. Okay. All right. In case where the bank is not the leader of the consortium of working capital, in case, suppose you're going for PNB and PNB was not the lead bank, who was the lead bank there? SBI. So you will say that please get the stock audit report from SBI. Okay. The report submitted by the stock auditors should be reviewed during the course of audit and special focus should be given to the comments made by the stock auditors. On valuation, on two things you have to focus: valuation of security, what is the value of security actually is, and calculation of DP. Okay, so two things you have to give special focus to. One is valuation of security and the other is calculation of drawing power. Are these points clear to all of you? Please write to me in the chat box. All right, very good. Now coming to a big topic, that is audit of advances. See, there are basically two kinds of advances. One is large advance and the other is others. Okay. So when do we say it is large advance? See, when the balance, year-end balance in the account of the borrower is more than 10 CR, or it is 10% of the total advance of the bank. For example, the total exposure of the bank, the total advances that bank has given is 20 CR. Okay, and out of that 20 CR, 5 CR belongs to this particular borrower, Mr. A. So can we say it is a large advance? Whichever is less, we say. Okay, if either it is 10 crore or it is 10% of the total advance of the bank, means bank has advanced to Mr. A, Mr. B, Mr. C, Mr. D, and the total of those advances is 20 CR. Okay, and the bank has given 5 or 6 CR to alone Mr. A. So it will be considered as large advance from the bank's point of view. Are you understanding this? Are you understanding? Okay, come to this. Are you all able to view the notes? Please write to me in the chat box. Audit of advances. Okay, all right. See, there are majorly two kinds of advances. One is large advances and others. So they say, as an auditor, you have to examine all the large advances. You can't take sample. All the large advances have to be examined in detail, and others can be dealt on sample basis. Okay. So they say, what are large advances? At the year end, the exposure, the borrower's account has a balance of more than 10 CR or 10% of total advance of the bank, whichever is less. More than 10 CR. Suppose it is 10.5 CR. Okay. So 10 crore or 10% of the total advance of the bank, whichever is this. Then we call it as a large advance. That's what, as an auditor, you have to examine the problem accounts. What are problem accounts? SMA 0, SMA 1, SMA 2 that we did that day. Okay, that has to be done in detail. Except when the amount is insignificant, it is very small to be seen. Okay, now they say that extent of checking depends upon the internal controls of the bank. Same as audit, if the internal controls are effective, the extent of audit will be less, isn't it? You will apply less audit procedures if you see that the internal controls are not effective. They are weak. What will you do? You will increase the audit procedures. Isn't it? All right. So, auditor is concerned with obtaining evidences about the following. Why have I written about in this caps or caps on and in capital letters? Why so? Because there are two kinds of questions which can come in the exam. One is regarding what things should the auditor obtain evidences. The other question could come, we will take up both from the material. The other could come that what are the, from where can he get the evidences? Are you understanding my question? There are two kinds of question. One is from where, what are the things that do you require evidence for? What things? So basically these things are nothing but assertions. The assertions that we have done in the earlier chapters, items of balance sheet. Do you remember? Do you remember the assertions? Okay, we will revise it here. Okay. So the one question can be, auditor, what are the things that auditor is concerned about obtaining evidences? Like what are the assertions? And the other questions could be, from where will he get the evidences? So from where can auditor obtain sufficient and appropriate audit evidence is a different question. But students get confused between the two, that what is asked. So we will discuss in detail. Let's first discuss the areas where auditor is concerned about obtaining evidences on the following. Number one is existence. Existence, that amount standing on the balance sheet date, it existed on the balance sheet date, that the balance that stood as on 31st March. Okay, he's concerned about that. Then the amount is due to the bank, means right, the bank holds it, it is on in the bank's name, that is supported by the loan documentation, that the amount is actually due to the bank. Okay, that these are supported by loan documents. Wherever you see the, you go through the documents and see, okay, this much amount is due to the bank. Next is completeness, that the bank has shown all the advances, there is no unrecorded advances. This is what completeness was all about, that all the things have been taken into account and nothing is left. Okay, so bank has shown all the advances, there are no unrecorded advances. For example, see, there is a separate advance sheet. So whenever we go to the bank as auditor, we say, please give us the advance sheet where all the advances are mentioned. Okay, and the balance sheet, okay, the asset side of the balance sheet, advances amount, say it amounts to rupees 40 cr. Okay, and advance sheet says that it is 50 cr. The total of advance sheet is coming to 50 cr and the balance sheet advances are shown at 40 cr. Now what will you say as an auditor? That the entire advances are not recorded. Are you understanding? This is known as completeness, that there are no unrecorded advance. Okay, it has once happened that there was two different amounts shown in the advance sheet and the balance sheet said something else. There was a mismatch. So these things actually happen. So you as an auditor, you have to be really very vigilant about it. Okay, all right. Now comes the valuation. Now the basis of valuation is appropriate and recoverability recognized in valuation. We say it is dealt with on record of recovery, isn't it? There are two kinds of accounts, standards account and NPA. Standard we recognize as income on accrual basis, but NPA only on realized basis. Isn't it? This is what we had done in the last class, always realized basis, but there were few exceptions. What were those exceptions? Anyone remember? Anyone remember those exceptions? Your FGs, your Indra Vikas Patra, your Kisan Vikas Patra. Do you remember all these things? All right, okay. So how will you calculate the value? Amount due minus the provision. So appropriate provision is made as per RBI norms and accounting standards and GAAP, generally accepted accounting principles. Okay, now come to your material. See, it is saying in carrying out audit of advances, the auditor is primarily concerned in obtaining evidences about the following. This is what we have done. That is the assertions. Isn't it? What were the assertions? EVRC. What did we do? Existence, right, completeness and valuation. See, this is what they are saying. That the amount included in the balance sheet in respect of advances which are outstanding on the date means it existed as on the balance sheet date. Then advances represent amount due to the bank. That is the right. Okay. Amounts due to the banks are appropriated, supported by loan documents. See, there are no assertions separately mentioned here in the material. But for your understanding, for your conceptual clarity, I have told you that these are the assertions. Because since now you have done the items of balance sheet, the assertions, from where can you get the evidences? So you can relate. And the more you relate, the less is the effort you take in learning, because you are able to apply it logically. Okay, are you understand? Appropriately supported by loan documents. Okay, then there are no unrecorded advances, means completeness. There are no unrecorded advances. The stated basis of valuation of advances, that relates to valuation. The advances are properly disclosed, classified and described accordance with recognized accounting principles and practices. Appropriate provisions towards advances have been made as per RBI norms, accounting standard, and generally accepted accounting principles. Is it clear to all of you? Please write to me in the chat box. Is it clear, dear students? Okay. Next question, which is confusing. I tell you that these 2 points are a little confusing for the students to understand, but if you understand once, you will remember for always. Okay. The auditor can obtain sufficient and appropriate audit evidence about advances by study and evaluation of internal controls related to advances. So if a question comes to you, from where can an auditor obtain, or you as an auditor, from where can you obtain sufficient appropriate audit advances about advances? Evidences about advances. So your answer will be this. And if the question comes how, then your answer will be the above points. Is it clear to all of you? See, the auditor can obtain sufficient appropriate audit evidence. How? By examining the validity of recorded amounts. How valid are the amounts recorded? Are they true and correct? Examining the loan documentation, because from there only you will get to know what are the terms agreement. Reviewing the operation of accounts. What do you mean by operation of accounts? How many times is the account being operated? How many times are the money inflow and outflow of the money in the account? Okay, so usually we say that you review it once a year. Why once a year? It is a general phenomena. Once in a year, if the borrower is operating the account, means he is depositing something, he is taking something, it is fine. Okay, all right. Then, examining the existence, enforceability, and valuation of security, because that is how you will maintain the margin. Okay, then checking compliance with RBI norms, including appropriate classification and provisioning. Very, very important. Because on the basis of timely payment only, you will recognize whether it is a standard asset or it is NPA. And if it is a standard asset or if it is NPA, you have to make classification and provision accordingly. Isn't it? Based on that only can you make the provisions. All right. Then carrying on appropriate analytical procedures. What was analytical procedures? Where you used to analyze the ratio and trends. So provisioning amount, you remember? 15, 25, 40, 100%. So what are we doing? We are doing analytical procedures. We are making provisions. Okay. Is this clear to all of you, dear students? Please write to me in the chat box if it is clear. See, all these are theory parts that you already know, but we are going through it so that you are able to retain, and few important things or terms that you have to remember and write in your exams I'm mentioning. Okay, all right. Then evaluation internal control over advances. Now this question is basically regarding the internal control process in the bank. How you as an auditor will evaluate the internal control. See, these questions might look quite similar to you. When it comes in the exam, you are confused what to write, this point, or this point. So this is why I'm asking you to keep asking questions if you have any. Okay, first we've done how will he obtain evidences, isn't it? Then from where will he obtain evidences? Okay, and this is regarding the evaluation of internal control process. So it says that auditor has to check that whether the bank, while making advances, has satisfied itself regarding the credit worthiness of the borrower. You just can't make loan to anybody like that. Any Tom, Dick and Harry walking to you and asking for loan, will you disburse? No, not at all. Okay, so this is what they are saying, that you just can't make loan to anyone. You have to check the credit worthiness of the person. All right. Okay, so this is what they say. Next, all necessary documents, for example, agreement, deemed promissory note, letter of hypothecation, all these things you have to be checked before making the advances, isn't it? Because these documents you have to satisfy yourself before the advance is made. Once moved, then you look at the documents, no use. Okay, all right. Then the compliance with the terms of sanction. On which terms are the sanction being made? Okay, what are the terms? That what is the installment amount? What is the principal? What is the interest? On what dates are they repayable? Okay, then sufficient margin. What do you mean by sufficient margin? That is, it is more than the value. Your security amount is more than the value of advances. Isn't it? This is what sufficient margin is. Isn't it, dear students? This is what sufficient margin means. That the value of the loan dispersed is the value of security is more than the value of advances, as specified in the sanction letter, should be kept against securities. Next, you have to see the ownership to the bank. Has the ownership to the bank has been transferred? If the securities are taken, are in the nature of shares, debentures, etc. The ownership of the same should be transferred in the name of bank in case of shares, debentures, and effective control over such securities to be retained as part of documentation. What controls you will see? That the value of security, is it fine or has it fallen? Suppose you have taken loans against some shares and the share market crashed down. So what will happen? The value of securities will fall down. So that is what you have to see as control. Okay, next. All securities requiring registration should be registered in the name of the bank. Okay, first we say in case of shares and debentures, the ownership has been transferred to the bank. It requires registration. It is registered in the name of the bank. Okay, otherwise accompanied by the document that is sufficient to give title to the bank. Okay, some documentation that is sufficient to give title to the bank, that we did in the hypothecation mortgage, where you transfer the ownership when neither ownership nor possession is transferred. You remember all these things? Okay, all right. Then in case of goods in possession to the bank, the contents of the packages should be tested at the time of receipt. Means when it is not with the owner, the possession is with the bank. Okay, then they say, and if the godowns, if it is at the godown, that the godown should be frequently inspected by responsible officers of the branch concerned, in addition to inspectors of the bank. So three things they have said: if it is in possession of the owner, if it is in possession of the bank, or if it is lying at the godown. If it is lying at the godown, then the inspection should be done regularly. Okay, then drawing power register should be updated every month. This can come in your MCQ, because see, drawing power is a very sensitive area. Based on the value of your stock, based on the value of your debtors is your drawing power. So monthly it should be updated. Okay, then value of security is hypothecated. These entries should be checked by the officer. The account should be kept within both the drawing power and the sanction limit that we know. All the accounts which exceed the sanction limit or drawing power, means it has disbursed in excess, that it should come to the notice of the controlling authority. The operations of each advance account should be reviewed at least once a year and at more frequent intervals in case of large advance. This is what we had discussed, that accounts operations is reviewed once a year and drawing power is reviewed monthly. Will you remember this? Operation reviewed at least once a year and drawing power reviewed monthly. Will you remember this? So hope all these points are clear to you. Are these points clear to you? Actual promissory notes payable on demand. Whenever you ask money for it, you are paid on demand. Okay, that is called demand promissory notes. That you say, I want now, on demand of the borrower, it is payable. Okay, all right. Are the points clear to you all? Okay, all right. Next is your drawing power. So drawing power, which we had done in the previous class, we have done all these examples regarding the drawing power, isn't it? Okay. Then coming to the income part. All right. So now, see, income recognition, one of the key areas of your advances. When will you recognize income? When will the bank say that we have earned income and we are going to recognize it? So, advances could be either standard or your NPA. If it is a standard asset, if it's a standard asset, you will recognize income on accrual basis as soon as it is accrued. Okay. But if it is non-performing, then you will always book your income on a realization basis. But there are exceptions like we had discussed, FDs, KYCs, KVPs, IVPs, all these are exceptions to it. Okay. So what is the auditor's concern regarding the income recognition? The auditor has to see whether that income pertains to the bank, that is occurrence. No unrecorded income is there, that relates to completeness. That the income has been recorded. Okay. Recorded appropriate amount, that relates to accuracy. And it arose in the relevant period. The bank is not recognizing income of the previous year, of this very year starting from 1st April ending on 31st March, that we call as cut-off procedures, isn't it? Okay. Say there is material income. What do you mean by material income? They say any income which is more than 1% of the total income, you are recognizing on gross basis. And if you are recognizing your income on net of cost basis, then profit before tax. See, there are two bases of recognizing your, taking your income. You are booking your income on gross basis, that is the total income. You are not booking on gross basis and you are considering on net of cost basis, means you are deducting all the expenses, then profit before tax. So if any income more than 1% of either your total income or your profit before tax is considered on accrual basis as per AS 9. You know, revenue recognition is done as per AS 9. So we say this is called material income, and all the material income is recognized on accrual basis. Okay. But if income is not material, it is not material, then you recognize on realization basis. That does not mean that the auditor is going to qualify the report for this area. That does not mean that the auditor will qualify the report for this very reason. Are you understanding this? Please write to me in the chat box. Is this clear to all of you? What is material income? If any income is more than 1% of the total income or profit before tax, it's considered as material income and it is recognized on accrual basis as per AS 9. And the rest of the other income, which are not material, is recorded on realization basis as and when realized. And the auditor will not qualify the report on these grounds. Unrealized point. Archer, you did not understand the unrealized. Unrealized, what do you mean by realization basis is as and when you are receiving the payment from installment from the borrower. Archer, try to understand. What is realization? What is realization? When you are actually receiving the money. And what is accrual basis? As soon as it becomes due. Isn't it? Your school fee, it accrue on the first day of the month. Okay. And when the school realized it, when you actually pay it, it is realization. Achal, now is it clear? Accrue and realization. Accrue is on the basis when it becomes due. Accrue. And realize when you actually receive it. Achal, is it clear now? Okay. All right. So let's do from here. Okay. So all these things, see, this has been mentioned here, income. So what is the auditor's approach to it? auditor's approach is in carrying out the audit of income, the auditor is primarily concerned with obtaining reasonable assurance that the recorded income arose from the transaction which took place during the relevant period and it is pertaining to bank. Okay, there are no unrecorded income and the income is recorded at appropriate amount. So RBI direction is, RBI has advised that in respect of any income which exceeds 1% of the total income of the bank, if the bank is reckoned on gross basis, and 1% of net profit before tax if the income is reckoned net of cost. See, maybe when you read from here, it becomes little difficult. That is why I have made this chart for you. Are you able to understand from this chart, dear students? Is this chart a simpler version of your whatever is mentioned in your text? Are you trying to understand? See, if I make you study from the text, maybe it feels all in blue, highlighted blue, nothing bold or something. So I have made this chart for you so that you understand in separately what is mentioned here. Okay. So all these things we have done, but you have not done in this form, you have done a chart form. But in exam, obviously you're going to write. See, charts are made for you to remember. Okay. But when a question is asked in the exam, you have to write in points. Okay. Don't go and draw a chart there. Please don't. All right. Okay. So RBI has advised what is this material income and it should be considered on accrual as per accounting standard 9. Materiality. If any item of income is not considered material, then it will be recognized on realization basis, isn't it? So ban recognize income on accrual basis. It is essential condition of accrual income that it should not be unreasonable to expect its ultimate collection. However, in modern days, banking, the entries of net income or advances are automatically generated through batch process in CBS. That is the core banking solution system that we had discussed. Okay. Is this much point clear to all of you? Please write to me in the chat box. Someone is writing something. Students, is this much clear to all of you? I'm waiting for your reply. Okay. All right. There is a question from Daksh. Ma'am, what are the securities that require registration? Daksh, your mutual funds, your debt securities, equity securities, all these, they require registration. Daksh, are you here? Okay, is it clear? So all these such kind of securities, they require registration. Okay? All right. Okay. So now coming to income recognition for NPAs. How do we recognize income for NPA? Now, please try to understand very carefully. If it has become NPA for the first time, okay, and you have interest has already accrued in the previous year. Interest was accrued, it was due, but not realized. Interest was accrued, but not realized. It should be reversed. How will you reverse it? You will pass the entry PL account debit to interest accrued. Are you understanding this? Or it should be provided for. Means a provision should be made. Why? Because it is not realized. PL account debit to provision. Is this part clear to all of you? For income interest that you have already, that was already accrued in the previous year, but you have not realized. So what will you do? You will reverse the entry. Are you understanding? This is the overall crux of your advance NPA. Okay, that if the interest is accrued and not realized, you are going to reverse the entry. What will be the reversal entry? PL account debit to interest accrued. Or either you reverse the entry, you pass a reciprocate entry, or you provide for it. Provide for means you make a provision. PL account debit to provision, like you make other provisions. Are you understanding this point? Please, everyone, I want your response. Zahira, I can't share you the WhatsApp group link. Maybe the technical team will be able to help. Technical team, please, if you can just post the WhatsApp group link on the chat box so that people. Ha. So if somebody can help the student, Zahira Begum wants the WhatsApp link. Okay. So now, you said if NPA is for the first time for the interest which is already accrued in the previous year but not realized. Now, how will you recognize the income? You will recognize income on a realization basis as and when income is realized. But there are exceptions. Advance against FD, NSCs, KVPs, IVPs, life policies, they will not become NPAs that we have done. But for this, you have to have adequate margin. Isn't? Do you remember this? It is income for these are booked on accrual basis, provided adequate margins were available for this. Do you remember these points? Yes. So for all the others, we are going to recognize the income on realization basis. But for uh, exceptions are your FDs, your NSCs, your KVPs, your IVPs. You will not make them NPAs. You will recognize the income on accrual basis for these very advances. If the advances against FD, against NSCs, against KVPs, against IVPs and insurance policies. Okay, provided adequate margins are kept. So let's come to this. This is what they have mentioned here. Revenue uncertainty. For non-performing assets, the bank should not recognize income on NPA until it is actually realized. Okay, and the exceptions are the FDs, NSCs, KVPs, IVPs and your life policies. Okay, then see advance against securities. Now coming to very interesting point, bills discounting and bills for collection. Are all of you ready with me? Please let me know that you are there with me. It is an important concept. I want your 100% attention. All right. So understand this very carefully, okay? This is a concept of bill discounting. Okay. See, there is a date of bill discounting is 15th March 25. Means I go to the bank to discount a bill. So that is called date of bill discounting. That is on 15th March 2025. It is a 1 month bill. Means its maturity is on 14th April 2025. The due date is 14th April 2025 when you would get rupees 500 for that bill. Are you understanding this? But I go to the bank on 15th March and say, bank, please discount this bill for me today. Bank will say, okay. For which I had to get 500, the bank is discounting me for rupees 400. The bank is paying me 400. So what is the discount income for bank? It is 100 rupees. Is this storyline clear to all of you? I go to the bank to discount the bill on 15th March. It's a 1 month bill. On 14th April 25, I would get 500. But I went to the bank today and I say, please discount it. I got 400. So what is the discount income for bank? It is rupees 100. Okay. Now, if you see properly, that this 100 rupee, when is the financial year going to end on? 31st March. Okay. And due date was 14th April. So should I proportionately distribute this 100 rupee into 2 financial year, that is financial year 24-25 and financial year 25-26? Or should I book it income for entire 100 rupees in the financial year 31st March? What would you do? Come on, write to me in the chat box. This 100 rupee income of the bank, how should the bank book? Should it book 100 rupee income for entirely for financial year 24-25? Daksh says entire in 24-25. Vedant say proportionately. See, what the bank should do, because now the financial year has not ended. Is it? It hasn't ended. And this relates to an amount for the bill that was due to mature on 14th April 25, that is 25-26. So the bank will apportion this 100 rupees into 2 financial year. 50 rupee in financial year 24-25 and 50 rupee in financial year 25-26. So this discount income of 100 rupees should be proportionately recorded in the books of accounts of the bank. How will the record entry? How will the entry look like? Debtors account debit 500 that a bank had to get. Okay. To bank 400 that has went out of the pocket. Credit what goes out? 400 gone out of the bank's pocket. To discount earned. Discount earned for 24-25 is 50 rupees. And to income received in advance 50 rupees. Next 50 rupees is for the financial year 25-26, which is now a liability for the bank because it is an advance income. Are you all understanding? The bank is receiving it on 15th March, 100 rupee. So 50 pertains to this year. That is the actual discount earned by the bank. 50 is income received in advance for the next year. Are you all able to understand this or not? Please ask me again if you are unable to. I said, I go to the bank on 15th March to discount a bill. Okay? The 100 rupee discounting will be proportionately divided into 2 financial year. 50 for financial year 24-25 and 50 for financial year 25-26. So entry would look like debtors account debit 500 to bank. 400 gone out of the bank's pocket. Discount 50 for 24-25. And income received in advance for 50 rupees for next financial year, that becomes the liability of the bank. Is it clear to everyone? Daksh, what's the logic? Ma'am will differ over two. The logic is that, Daksh, this 100 rupee is not the entire income of the bank for financial year 24-25. This bill was supposed to be due on 14th April 25, that is 25-26 financial year. So is it prudent to book the entire income this year? You tell me. Daksh, how do you book your income? Accrue basis or realization basis? So will it not become the liability of the bank if it receives a discount income this year for the next year? Okay, now have you understood? Yes, got it. Good. This is how you should ask your doubt, because the more you will ask, the more you will remember it. Okay. So this was the story of bill discounting. Is this story clear to all of you? Bill discounting? Have all of you understood bill discounting? Write to me in the chat box. Is bill discounting clear to all of you? Okay. Now coming to rediscounting. What do you mean by rediscounting? When bank go to the other bank to discount it. That discounted being now bank wants money. So it goes to some other bank to again discount it, to rediscount it. That is called rediscounting. Okay. Now what happens is the bank has to pay some charges. It is an expense of the bank. The bank has to give some charges for rediscounting the bill. So this charges will be booked as expense of the bank. and not as, it will not net off the income, that discount income is 100 minus the charges paid for rediscounting, net off is not allowed. This is what they mean to say. That if you go to another bank to rediscount it again, some charges you have to pay as bank. So this is an expense of the bank which will be booked as expense. And the bank cannot say my income is 100 minus discounting charges paid, net of income is this. No, this approach is wrong. Are you understanding this? See what they say. That income, see, come here, bills purchased, interest component paid by the bank on rediscount of bills from other financial institution is not to be netted off from the discount earned on bills discounted. Is this much clear to all of you? Have all of you understood this bill discounting and rediscounting? Okay. One more time, please. Okay, Harsh, what rediscounting? Okay. Harsh, try to understand. Bill discounting is I go to the bank to discount the bill. Rediscounting is bank going to another bank to rediscount it again. Now bank wants the money. So the bank is going to the other bank for rediscounting. So when bank goes to the other financial institutions or bank, it has to pay some charges to the bank. Now that charge that is paying for bill rediscounting has to be booked as expense for the bank. And it cannot say my income was 100, I'm paying 60 rupees charges, minus 60, 40 is my net income. It can't say like this. It has to book 60 rupees as expense in the PL, and this will not be netted off from the discount earned, income on discount on bill discounting. Are you understanding this? It will not be netted off from the discount earned on the bills discounted. Now is it clear, Harsh? Okay. Achal has not understood bill discounting. Okay. Achal, look here. I said I go to the bank on 15th March to discount a bill, maturity of which is on 14th April, means 1 month bill. I'm discounting it prior. Okay. So which amount I had to get on, the amount I had to get on 14th April was 500. But today bank is paying me 400. So what income has bank earned on discounting? 100 rupees. So this 100 rupees the bank will proportionally distribute into 2 financial year, because I went to the bank on 15th March. Financial year gets over on 31st March and the bill was due on 14th April. So both the financial years were involved here. Okay. So apportionately 50-50 I am going to distribute it as bank income. Is it now clear, Achal? Okay. All right. Now coming to another concept. See what do they say? They just say for bills purchased at the close of the year, discount received should be properly allocated between 2 years. Discount related to period of the year recorded as other liability. This is the journal entry that we had done. Okay. Interest paid by the bank on rediscount is not netted off from discount earned on bills discount. It is recorded as expense. So this can come in your MCQ. Okay. Will you be able to answer that? Okay. Coming to another concept, that is bill for collection. Bill for collection. Am I getting 100% attention? Am I getting 100% attention? Another important concept that if you miss out, you will not be able to understand. Okay. See, there are two parties. Mr. A, who's the exporter, Mr. B, who's the importer. Sequence wise, I have put the numbering, just try to concentrate there. Okay. Mr. B wants to purchase some goods from Mr. A, exporter. Okay. Now, Mr. A, Mr. A doubts, what if Mr. B does not pay me the money? He doesn't trust Mr. B. Okay? But Mr. B wants the good. Mr. A wants to sell the goods also, but then he is in a dilemma. So Mr. A thought of an idea that I will send the goods to Mr. B, but not the documents. That is the title documents of title. Are you understanding? The title deed I am not going to send. So he sent the good and he does not send the documents. Now, Mr. A, the exporter, he tells his bank that bank, here is the bill for collection that I got from Mr. B. He said that I will pay you this amount. Here is the bill plus the documents. When he pays me the money, then you can transfer this document. Bank will do what? Bank has some branch or agent in that country where Mr. B resides. Okay? Did you understand the story till now? Mr. A, he doesn't trust Mr. B. He has sent the goods but not the documents. Mr. B tells his bank, bank, here is the bill for collection that I got from Mr. B. It's the documents that I haven't transferred to him. Mr. B will send this bill and documents to the branch or agent sitting in that country where Mr. B resides. Now that branch of the bank of Mr. B means the branch where Mr. B resides, that banker or agent tells Mr. B, Mr. B, you take this document of title and give me the payment. You know, one hand you pay me the money, at the other hand you take the documents from me. Like this. Okay? So this branch and agent, it tells Mr. B, Mr. B, you give me the money and take the documents of title from me. Mr. B said, okay. Mr. B takes the document because Mr. B can't hold the goods without the documents. No, that good title will not be transferred to him. Who will get to know that he has purchased the good or he has stolen the goods? Without the documents, the goods are not yours. So documents is very important. So Mr. B, he pays the amount and he takes the documents. Are you understanding this story? Are you understanding this story? Now, as an auditor, you have to see that when is the account, now from this transaction, who has earned? One, Mr. A, who was the exporter, he has got his money, and the branch or the agent sitting in that country, it gets some commission. Obviously, why will it take the pain to collect the money on behalf of some other bank? It takes commission. So there are two beneficiaries to this transaction. One is Mr. A, the exporter, and the other is the branch or the agent who's getting the commission. So as an auditor, you have to see whether Mr. A's account is credited with that money, whether commission has been credited to that branch or agent's account. So as an auditor, you will examine the procedure for crediting the exporter for whom the bill is collected, and the customer account is credited only when the bill has been collected either by the bank or the agent. Okay? Branch commission is due only when the bill is collected. Is this story clear to all of you? Pooja, kind of, you can say. Just a minute, Khushi has asked me a long question. I really need to read it. Just wait. Ma'am, as you said, after discounting, the income of bank is 100. But when bank collected this money from the debtor, bank will collect whole amount, that is 500. Then that 100 is also bank's income. See, it will get 500 later, but 400 it has already given. So 100 rupees is the income of the bank. Khushi, are you able to understand? Khushi, this 100 is the discounting income of the bank that it has got before. Khushi, I am talking to you. Khushi, it is as simple as bank. No, but the discounting income is only 100 rupees. That will be for the bill. The money that bank will get later on is for the bill that it had to get anyways. But this 100 is for the early taking, discounting the bill, no? Do you remember your bills for discounting entry? Khushi, what was the entry? Tell me. What was the entry? Tell me. You used to debit the discount amount, na? So this is what debit means. You are giving to the bank, and it is the income from the bank's point of view. Khushi, you used to pass the entry where you used to debit the discount account. Now do you remember? You are debiting. You are giving it to the bank. So it is the income of the bank. Okay. Now is it clear, Khushi? Okay. Can we proceed? All right. Now coming to renegotiation of outstanding debts. Again, a very important concept. See, there is a loan that you had to return tomorrow to the bank. Okay. That is, the due date is tomorrow. But you go to the bank and say, bank, I will not be able to recover, return this money of a loan to you tomorrow. I will return it next year. Bank says, okay. You keep it for another 1 year. But for that, you have to pay me some charges, commission. Because you are keeping my money for for another 1 year. Is this story clear? Is this story clear? That you have to return the loan tomorrow, and you go to the bank and say that I will return it next year. Bank said, okay, fine, but you pay me some charges. Okay. So this process is called renegotiation. You are negotiating it again with the bank. Understand the grammar, huh? Negotiation, renegotiation. You are again coming with the bank and negotiating. Okay. So renegotiation of outstanding debts. So the fee or commission that the bank is receiving is to be recognized not on receipt basis but on accrual basis, as it become accrue over period covered by renegotiation. It has to be spread like your 100 rupee discount income is spread between the years. Likewise, your fees or commission the bank is receiving, the bank will spread it across the year covered, period covered by negotiation on accrual basis. Is this clear to all of you? Whatever the reschedule period has been negotiated at, the entire fees will be spread over the period. Proportionately over period. Yes, you can say that. Okay. Achal, whatever is the period like, you will spread it accordingly. Is this clear, Achal? You are just rescheduling the extension of credit. Okay. All right. So you as an auditor, you have to check the interest income on sample basis, and you have to also check whether the fees or commission on bills for discounting, letter of credit, bank guarantees, whether it has been recorded properly or not. Okay. All right. So coming to your material, see, we have done bills purchase, we have done bills for collection, we have done renegotiation. Now coming to reversal of income. Favorite of ICAI. Very, very important. Okay, are you all ready? Are you all ready? Okay, reversal of income. So it says for NPAs where interest was accrued and credited in the past periods, including for government guarantees, advances which are not realized. The interest was accrued and credited in the past year. For NPAs, where you get fees, commission, income accrued but not realized. So in both the cases, case 1 and 2, the income is not realized, but you have credited, you have accrued it. So what will you do? You will reverse it. Third, wrongly recognized income in the past. Means it was not your income, but you have wrongly recognized it as income. When you have credited, now you debit it. So in all the three cases, what are you going to do? You are going to either reverse or make a provision. Provided for means you will make a provision. Is this clear to all of you? For income, any income for NPAs, which interest was due, you have accrued, you have credited but not realized. So first two cases plus any income which was wrongly recognized as income in the past. It was not your income. Okay, so you are going to reverse and provide for. So the auditor, as an auditor, you have to check, you have to inquire if any large debit in the interest income account which is not explained. Large debit means you have done the reversal because interest income is usually credited, but now you have debited it, so means you have done the reversal. Are you understanding this, students, or not? So as an auditor, you will see that, oh, this large debit means the reversal has been done. So for point 1 and 2, reversal is done. Again, there was some communication of borrower pointing out differences and interest charges. Means there was some income which you have wrongly recognized. Then the borrower will tell you, now, how come this amount is debited, sir, from my account? It has been wrongly debited and you have wrongly charged as income. So please reverse it. So this communication of borrower pointing on differences means you as a borrower, you are seeing your account is debited with some amount unnecessarily and the bank has booked as income. So the bank will reverse. So how will the auditor verify that? Through a communication of borrower. Are you understanding these points, dear students? Please let me know. For first two cases, the auditor will see that whether any large debits have been made. Large debit C means there was a reversal. Okay. But for some income which was wrongly recognized, the borrower must have communicated with the bank, sir, please, this debit, what is this debit for? So the bank say, okay, my bad, my fault, I will reverse it. Are these 3 points clear to all of you? Please let me know, dear students. To all of you? Okay. Coming to our next topic. So this is what they have said. Okay. Coming to the next topic, that is AS 19, that is the finance lease. Again, they say this finance income is due and credited to your income account, but if it is unrealized for more than 90 days, it is overdue for more than 90 days, again the same treatment, reversal or provision to be made. So if a question comes to you, finance income accrued and credited but not realized, so it has to be either reversed or provided for, means a provision for the same has to be made. Very small concept. Okay. Again, next, is this much clear to all of you? Everything clear till now? Please let me know. Okay. Now, another important concept. Why I say important? Because it is new. So please give your 100% to understand takeout finances. Takeout finances mean whenever you need money, you go to the bank, you take out finance. You ask the bank and take out the finance. Bank is financing and you are taking out the finance. Taking out the finance, you are making use of that bank's money. So on every occasion, you are taking money from the bank. That is called takeout finance as and when required. Are you understanding? So there are two concepts to this takeout finance. Usually you take it for a long-term finance. When you need a long-term loan, you adopt this method of takeout finance. It works on two bases, either date-wise or CPC basis. What is date-wise? Year 1, you said, bank, I need 2.5 CR. Okay. Year 2, you go to the bank, you say, sir, I need 2.5 CR. You are taking out finance. Again at year 5, you say, sir, 2.5. Okay, bank give you. Again at year 8, you say 2.5. Okay. So the total amount of loan you wanted was 10 CR. But occasion, on different time, you had asked for the bank. Why? Because you said, I can't take that entire burden of 10 CR. Slowly and steadily, I am taking loan from the bank. Are you understanding this? And the other is your criteria for project completion. You have taken some project, long-term project, 10% of the project done, you say, sir, please give me 2.5 CR. 25% of the project done, you say, sir, please give me again 2.5 CR. 50% of the project done, you say, sir, please give me 2.5. 75% again 2.5. So here also you wanted 10 CR, but it is based on the completion of project, the percentage completion of project that you do in your AS7 construction contracts. Are you able to relate, dear students? Did you understand this concept of takeout finance date wise and CPC wise? All of you? Okay. See, now they say it is a long term financing where the lender promises to provide money. Lender is the bank. Promises to provide money either on particular date or when CPC is met. What is CPC? Your criteria for project completion. This much completion, this much percentage complete, you take this money. This much percentage complete, you take this money. Okay. So you have to see that loan procured, it's later used to replace initial loan. No. Basically what happens, here you have to just check that whatever loan is procured, okay, it is later used to replace the initial loan. Means the entire amount you wanted was 10 CR. But slowly and steadily you are taking this 10 CR. It is commonly used for property development like it is dealt in your NPA AS7. Now, when does this kind of takeout finance become NPA? It is based again on record of recovery. Means as and when you are recovering it. If account balance becomes NPA, like any other balance, you will treat this as NPA. And then income is recognized on realization basis, like any other NPA, you will you will recognize the income on realization basis, isn't it? Can you just imagine you have done AS9 year, AS7 year, AS19 year? Are you even realizing? This is the beauty of audit, that your accounting standards go hand in hand. I don't know whether I told you this or not. Sometimes when you look at question number 1 in your audit paper, it looks as if you are appearing for your accounts paper and not the audit paper. Questions from accounting standard relating to your audit. Okay, so see, AS9 so crystal clear now. Realization basis. AS7 project completion basis. AS19 again, AS19 income recognition. How will it be recognized? So all of this done. Are you understanding, dear students? Is this portion clear to all of you? Is takeout finance clear to all of you? Please let me know, dear students. I'm waiting for your reply. Now, what are the benefits of taking out finance? What is the objective, or you can also say benefits? Number one, it expands the source of finance. It is a new source of finance, isn't it? When required, as and when required. So to expand the source of finance for infrastructure projects by facilitating participation of new entity. So this is the objective. Again, to address the sectorial group or entity exposure issued and asset liability mismatch concern. Bank is giving you little loan and you are utilizing it little. What used to happen actually, just understand, earlier if you take a loan of say 10 cr, you have this burden of paying 10 cr, but now there is little burden, you are taking little liability and you will be able to repay. Then so this mismatch of asset and liability, both from bank point of view and as well as borrower point of view, it is compensated, isn't it? Then to boost the availability of longer tenure debt finance for projects, when when you require loan for a long period, for example your project periods, those are usually long. See, if you are going to build something, it is going to take years. So this form of loan takeout finance is very beneficial. Okay, not much burden at one point, at the same time you are using the money of the bank also. Okay, so is takeout finance clear to all of you? Please let me know, dear students, I'm waiting for your reply. Okay, now coming to another concept that was in your RTP May 25, partial recoveries in NPA. Partial recovery of NPA, again understand, usually what happens is, we say if your amount is overdue for more than 90 days. Now suppose the total installment was rupees 10 lakh, where 9 lakhs was towards the principal and 1 lakh towards your interest. This is just an example. Usually what happens is, you will pay 10 lakhs. Okay, so bank knows that 9 lakhs is towards the principal and 1 lakh is towards the interest. What if you are just paying 3 lakhs to the bank? The bank recovered only 3 lakh. Now, how will the bank think what portion of it is principal and what portion of it is principal? Interest. Okay, installment was for 10 lakh. You are paying only 3 lakhs. Now, bank is in a fix. Now, there are two solutions to bank. Either there was an agreement with the bank which said that principal will be for 2.7 lakhs and interest will be for 30, means the ratio they have divided, that this percentage will be towards principal and this percentage will be towards the interest. Either there was some kind of agreement. So we say, okay, 3 lakhs, 2.7 towards principal and 30,000 towards interest. Okay, fine. But in case there was no agreement of such sort, now what the bank will do? Bank has to follow some kind of policy, accounting policy, and we all know as per AS1, whatever policy you follow, it should be consistent and uniform. It should be followed from time to time. Now, either the bank says that we are fixing a priority, that whatever amount you recover will be first set towards the principal and then towards the interest. So in this case, what will happen? The entire 3 lakhs will be adjusted against the principal amount and nothing towards the interest will be deemed to be recovered. Are you understanding? So the entire 3 lakhs will be the principal. As per AS9, income account for where there is, when do we account the income? When there is certainty. When do we account for it? When there is a certainty. And what is the income for the bank? Income for the bank is the interest received. But it says that for this interest to be given to the bank, no fresh or additional credit facility is taken. Are you understanding? It simply means 3 lakhs you have paid towards the principal. Now 7 lakhs is left. Whatever you will pay again will be adjusted toward principal. Now you say, oh, I don't have money for repaying this money. Again, fresh loan is taken from the bank. This is not acceptable. This is what they are trying to say. That whatever amount you take, there should be no fresh or additional credit facility to repay the original loan. So what is happening? A loan over loan, and this way you will for lifelong be indebted to bank. So what does it say? In the absence of agreement for appropriation of NPA to principal and interest, banks are required to adopt consistent and uniform accounting policy. In case 9 realization not recognized in the past should be accounted for, and interest should be fully partially realized considered as income. Now you have to ensure that credit towards interest is not out of the fresh or additional credit facility. No fresh loan is given to meet this interest amount. Is this clear to all of you? Please write to me in the chat box. Is partial recovery clear to you all? Dear students, I'm waiting for a reply. To all of you, it is clear. It was a new concept. I've tried to explain you. If you have not understood, please ask me again. It is clear. Fine. Can we take a break of say 9 minutes or so? We will get back at 7:30. Is it clear to all of you? Show me a thumbs up. Can we come back at 7:30 now? All right. Technical team, we are taking a break and we will be back by 7:30. Okay. She's asking, ma'am, in reversal of income point number A, if the same is not realized, it will apply to government guarantee accounts also. What does it mean? Okay, let us read to this what she's asking in reversal of income point number A. It says if any advance including bill purchase and discounted becomes NPA as at the close of the year, the entire interest accrued and credited to income account in the past should be reversed or provided for in the same is not realized. This will apply to government guaranteed accounts also. It means that will apply to your state government accounts also. See, if it even the central government, we say it will not be considered as NPA. But for recognizing the income, we will not realize, we will book it on realization basis only. Achal, try to understand this. We had covered in the previous session that you will not deem it as NPA. Okay? If it is central government backed up security advance, you will not treat it as NPA, but income recognition will be the same on realization basis. Achal, is it clear to you now? Achal, please answer, beta. So, reversal of income will be done. Okay, reversal will be done. NPA will not be considered. That is the only difference. Okay, all right. Now, coming to our next topic, that is memorandum accounts. Government guarantee, you will not treat it as NPA, but income recognition will be dealt with as the same it is dealt with in other accounts. Achal. Okay, I will take you back to this point. Okay, all right, understood now. Have you understood now? Okay, let's proceed to memorandum account. Now, what is this memorandum account? This memorandum account is a kind of dummy account that banks create. It is not a real account. Okay, this memorandum account is a dummy account. Okay, it is not a real account. Okay, so let's check. What is this message? Okay, Achal, I will take up your query before the class gets over. Is that clear, bacha? I have understood what your doubt is. I will take it up again. Okay? All right. Now, coming to this memorandum account. This memorandum account, like it is a dummy account. It is not a real account that banks create. So, they say normally for NPA, what do we do? If interest is accrued and not realized or collected, we reverse it. And we stop further accrual of interest. Means we do not accrue it now. Why? Because we know if you will accrue again, you have to reverse it because the borrower is not paying the money. So you had booked it on accrual basis. Now you will reverse the entry. However, in case of memorandum accounts, since it is a dummy account, the banks can continue to accrue the interest in memorandum account for control purposes. What control? NPA controlling purpose. But they say that for taking this gross advance is your advance plus interest accrued. They say, will you include this interest in the memorandum account? They say no. For computing gross advance, the memorandum account interest will not be included. Why? Because actually there was no recovery. There was no recovery. Just for the dummy account, just for the sake of bank keeping control over NPA, it was continuing to accrue it. Continue to take it as okay. They continue to accrue the interest. Okay, they debit the interest. But they say, what is the point? You are not going to recover it. So whenever you calculate your gross advance, this interest in your memorandum account will not be included. Are you understanding this? Gross advance is your advance plus your interest accrued, your total advance. So they say for computing the gross advance, the memorandum interest account will not be included because it was a dummy account. This interest is actually not there. It has not accrued. You were continuing to accrue it as your dummy fictitious account and trying to create for just control purposes. So it is something internal to the bank. So this interest accrued in the memorandum account, we will not consider it, we will not include it for computing the gross advance. Have you understood this point, dear students? My video is paused. Is my video paused? Students, please reply. Okay. I don't think so.
Hello, ma'am.
Hello.
Ma'am, I think network issue on your end.
Uh, my video is
Stuck, ma'am.
fine. Is it fine? Please let me know.
No, ma'am. No, ma'am.
It's fine. It's not fine.
No, ma'am.
They are saying it's okay. The students are writing to me it is okay.
But
Are you able to hear me, dear students? Is my video and audio clear?
audio is clear, but video not clear.
Video is not clear.
No, ma'am. Stuck हो
Okay.
रहा है video में.
Video is stuck हो रहा है.
Yes, ma'am.
Is it fine now?
Yes, ma'am. I
Okay. 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 All right. So we were discussing that since this memorandum account is a fictitious account created by the bank for computing the gross advance, we will not include the interest accrued in this memorandum account for calculating the gross advance. Okay? All right. Is it clear? Please show me a thumbs up and write to me in the chat box if you have understood the concept of memorandum account. Please write to me in the chat box. Okay. All right. Okay, they are showing a thumbs up. Is everything fine? Please let me know, is the audio visual fine? Yes. Okay. Technical team, is it fine now?
ma'am audio
Technical team.
audio सही है, but video not there. Stuck हो
Okay,
रहा
I
है.
will share the screen again. Let me see if I'm sharing the screen again. Okay, I'm just stopping the screen and I'm sharing it
Okay.
again. Okay. Now tell me, is the screen visible? Is the screen visible now?
No, no. Yes, ma'am. Yes, ma'am. Screen
Fine?
is
Is it
visible.
fine?
Yes, ma'am.
Okay. All right. So this was about the memorandum account. Okay. Coming to our study material, we have done this memorandum account, income from investment, our next topic. Okay. Now see what they are trying to say, that all your government securities, your bonds, your corporate debentures, your other investments will be treated as income. Okay, but your dividend from subsidiaries and joint venture will not be included. Okay, they say it will not be included as your income on investment. This is what they are trying to tell. Just come to our study material and see. They say this interest on in interest income on investment, it includes all the income derived from government securities, bonds and debentures of corporates and other investments by way of interest and dividend, except income earned by way of dividends from subsidiaries and joint ventures abroad or in India. Okay, there is a concept of broken period interest. Now, what is this broken period interest? Just try to understand. For example, the loan acceptance date was 25th April. Okay, the date I accepted the loan is 25th April. First EMI was due on 5th of June. Okay, so from where are we going to calculate the interest? 6 days of April, 31 days of May, and 4 days of June. That comes to total of 41 days. Okay, usually the full period we consider as 30 days. Usually the full period we consider as 30 days, but here it is 41 days. That is 11 days additional interest has to be accounted for. So this 11 days is called broken period. Let me check what is happening.
Ma'am? Hello, ma'am?
I'm there. I have just paused to just check the chat boxes. Is the video audio clear? Is the video audio clear? Please let me know.
Ma'am, video is not clear. Audio is clear,
Video
but
is not clear. Is the audio clear?
yes, ma'am. Yes.
Audio is clear. Audio is clear. Video is not visible. Should I share the screen again?
The screen is visible, ma'am.
Why is this? Screen is visible. So what is the? मैंने दूसरा connect किया है तब मैंने पूछा. I've connected another connection. Yes, ma'am. Or now it is clear. Uh, is the video clear? I'm scrolling the screen up and down. Is the screen visible now?
Yes, ma'am. Yes, ma'am. Please continue, ma'am. No issue.
Okay, it is now. It is clear now. The audio and visual both clear. Fine. Okay. So we were talking of the broken period interest. See, I said the date I accepted the loan was 25th April. The first EMI due was on 5th June. So how many days interest will we see to? 6 days of April, 31 days of May, and 4 days of June. Total it comes to 41 days. Okay. Generally, we say 30 days is a full period, but here 41, 11 additional days, that is called the broken period. So this 11 days is broken period. Is the concept of broken period clear to all of you? Please write to me in the chat box. This additional 11 days is we call as broken period interest. Interest for these additional 11 days is called broken period interest. Okay. Now they say that this broken period interest paid for this 11 days plus your statutory liquidity ratio investment, SLR investments, okay, the amortization expenses of the bank, we are going to add and we are going to net off this from the interest income from investment. Whatever income you are getting from investment, okay, we will minus this broken period interest paid plus this kind of investment or any kind of expenses of the bank. So simply what you have to remember this as broken period interest plus the expenses of the bank like SLR investment, your statutory liquidity ratio investment will be netted off from the income from investment. Simple, what you have to remember is both these things are netted off. Let's come to our study material. Let us see what does it say. It says the broken period interest paid on security purchase and amortization of premium of SLR investment is netted off from the investment income. So this broken period interest, your other expenses will be netted off, means the entire income from investment minus broken period plus the expenses of the bank. Student, is this concept clear to all of you? Are you able to see the screen? Yes. Archer is saying yes, it's study material now. The rest of you are saying no.
Visible now, ma'am.
Okay. Are you all able to view the screen? Visible hai na? Okay. So it says this includes all the income derived from government securities, but not the investment, not the dividend income from your subsidiaries and joint venture. Okay. Plus, they say that the broker interest period plus the SLR investment premium on amortization will be netted off from the income from investment. This is the whole concept of it. Another point where they say that profit on sale of investment and profit or loss on revaluation of on investment will be dealt with at your PL account. What does it say? Investments are dealt in the course of banking activity, and hence net profit or loss from sale of investment is taken to profit and loss account. Similarly, profit and loss on revaluation also is dealt with in your profit and loss account. So that is the normal journal entry and accounts that you all deal with. Okay. So there is nothing new. Now coming to the expense part. But before that, I want to make sure that you all have understood this much. Students, have you understood? I'm waiting for your response. A technical team, is everything clear now or still there is some glitch? Vedant is saying yes. Others also please reply. Yes. Okay. All right. So I'm proceeding to the last leg of our chapter, that is the interest expense. So what is the basic expense of the bank? What is the major chunk of expense? That is the interest that the bank has to pay on your deposits. Whatever deposits you keep with the bank has to pay interest the same, isn't it? So this is what the major expense of the bank is. So first of all, they say there is few methods. One is method. What does auditor say here, tells here? The auditor wants to assess the overall reasonableness of amount of interest expense by analyzing ratio of interest paid to the quantum of respective liabilities. Let's see to this example. There are three accounts: your current account, saving accounts and FD account. Now let's say the rate of interest, let's assume that the rate of interest in your savings account is 4% and FD account is 7%. Current account, you don't get any interest. I hope you all know that for the current account, no interest is served to you. Okay, because it is your day-to-day functioning of the account, no interest is debited there. Okay, so savings account, savings and FD, you are getting a 4% and 7% interest. So, and the interest paid by the bank, when I ask the bank, how much interest have you paid? They say 4 lakhs for the saving accounts and 7 lakhs for the FD account. Okay. We say, what is the average liability? They say 1 CR for the savings account and 1 CR for the FD account. Now, we will take out the ratio. How are we going to take out the ratio? Interest paid divided by average liability. So, what is the interest paid? 4 lakh. Average liability 1 CR, that comes to 4%. Interest paid 7 lakhs. Average liability 1 CR, that comes to 7%. Ma'am, the rate and the ratio are same? Yes. This is what you have to check as an auditor. But what actually happened nowadays, because of your CBS system, these interests are automatically accounted, but still you can check them using these methods. So they say auditor wants to assess the overall reasonableness of amount of interest paid by analyzing the ratio of interest paid to the quantum of respective liabilities. So what as an auditor you are doing? Interest paid divided by the average liability, you get the ratio. This is what you are comparing with the rate. But in modern days, interest expense is automatically accounted by the CBS system. Another is your weighted average method. What happens here is ratio analysis method clear to all of you? Please write to me in the chat box. Is ratio analysis method clear to all of you? Okay. All right. Coming to the weighted average method. Here see, for one quarter, say savings account, you are giving 800 crores. 800 crores, FD accounts 200 crores. Now, what actually is, and you assign some weights like 80%, 20%. Okay. Agreement rate, the one rate of agreement done with the bank, that bank saying savings I will give you 4%, fixed deposits I will give you 7%. How will you calculate the weighted average interest? The agreement rate into the weight assigned, 4% into 80%, 7% into 20%. So the weight you are saying is 3.2% and the 1.4%. Total it comes to 4.6%. Now, when you see the annual accounts of the bank and you see the interest of quarter 1 paid, the average balance there was 48 CR. Now, 48 divided by 1000 CR is comes to 4.8%. Now, these two percentage, you as an auditor, you are going to compare and analyze. So, what are we actually doing in weighted average? We are trying to take out the weights and then compare the ratio. So, the average balance of saving accounts was, the total balance is 1000 CR. Okay. And then they say that weights assigned as per bank is 4.6, but as per annual accounts of the bank it is 4.8. So whatever difference is there, the auditor is going to analyze this difference. Let's come to our study material. Are you able to view the study material? Are you able to view the study material? Okay, see. In carrying out an audit of interest expense, the auditor is primarily concerned with assessing the overall reasonableness of amount of interest expense by analyzing the ratio of interest paid on different types of deposits and borrowings to the average quantum, that is the first one we did, okay, of the respective liabilities during the year. However, in modern banking, the entries are dealt with by the CBS system. Next, the weighted average. The auditor should obtain from the bank an analysis of various types of deposits outstanding at the end of each quarter. Like we said, 800 CR and 200 CR, isn't it? Then, for such information, the auditor may work out the weighted average interest rate. Then, the annual books of the bank and the calculation done by the auditor, the variation 4.6 and 4.8, these the auditor will compare and analyze. From such information, the auditor may then compare this rate with the actual average rate of interest paid on the relevant deposit as per the annual accounts and inquiry into difference, if any, is material. Did you understand these two methods? Daksh is asking, ma'am, what is average quantum? Beta, average was the average quantum of respective liability. Average quantum of the liability of savings account, average quantum of the liability of FD account. Okay, all right. So are these two methods clear to all of you? Next is the YOY. What is YOY? What is YOY method? See what happens here. Yes, year on year. Okay. What happened is we compare the average interest paid on deposits with the previous year and analyze if any material difference is there. For example, we compare that in April, the interest paid was rupees 2 crore. In May, the interest paid was rupees 3 crore. So we say how come the interest paid in May is more as compared to interest paid in April. Are you understanding? I said interest paid in April is 2 crore. Interest paid in May is 3 crore. So how come May interest is more? What is the reason? So the auditor will compare the average interest paid with that okay, and then he is going to compare the two. This is month on month. If you compare it with the previous year, it is year on year. This is with the previous month, that is month on month. If you compare the April with the May, that is month on month. If you compare with the previous year, it is year on year. Like in 25, the average interest paid was 20 crore. But in 24, it was 30 crore. So this difference year on year, we say it is year on year analysis. Month on month, it is the same, but we compare it with the previous month. So what do you obtain? You obtain the ledger breakup of the interest was like 22 crore compared with 3 crore. So that way, what do we compare the previous month? Okay, clear to few year on year analysis. Students, I'm waiting for your response. Okay. Are these points? Last is the average balance. In average balance, what does the auditor do? He understands the process of calculating average balance and recompute it on sample basis. He clarifies. Okay. So coming to our material, let us see. The auditor should on test check basis verify the calculation of interest that ensures that interest have been provided for in all deposits date of the balance sheet. Then interest rate are in accordance with the bank's internal regulation, whatever the bank has decided. Interest on savings account are in accordance with the rules framed by the bank or RBI itself. Then interest on inter-branch basis. Inter-branch, understand, one branch with the other branch has been provided at the rate prescribed by the head office or RBI. Okay. Is this much clear to all of you? Are these four methods clear to you? Study material is not visible. Is the study material visible now, dear students? Students, now is it clear?
Hello, ma'am.
Yes, sir, I'm there. Am I audible and visible? I'm not able to understand because I'm getting a very mixed uh, messages from the students that it is visible, it is not visible. I'm not able to actually understand what is happening.
Ma'am, no,
Am I audible and
audible, but
am I audible
video
and
is not.
visible?
Study material is
Video
visible.
is not clear.
No, ma'am.
So study material only I'm showing, sir. I'm showing study material only. Is it now okay? Daksh, am I visible? Archer is saying I'm not visible. Daksh is saying it's visible. I'm getting very mixed messages from students. Technical team, please clarify. Am I audible and visible?
Ma'am, I think network problem. Your end.
Network problem. Technical team, just give me 2 minutes. I'll try to fix something.
Okay,
2 minutes, huh? Yeah.
संकेत जी, यूट्यूब में सर बैनर कर देना 2 मिनट के लिए.
धर्मेंद्र जी, बताइए अभी स्टेट है.
मैम अभी भी वही प्रॉब्लम है.
मेरा स्क्रीन दिख रहा है. I'm continuing, okay?
Yes, ma'am. Please continue.
Okay. So we were discussing about the 4 types of analysis. We had discussed the ratio analysis. We have discussed the weighted average, MOM, YOM, YOY, and the average. Okay. And the average balance. Okay. So now coming to our next topic. Is my screen visible? The note screen? Is my note screen visible, dear students?
मैम स्टडी मटेरियल विजिबल है, नोट्स जो
है ना?
है
हाँ, ठीक है, ठीक है, ठीक है. Okay, okay, okay. So coming to the next topic, that is audit of operating expenses. Okay. So what have you as an auditor to see for operating expenses? What are the operating expenses of the bank? Your rent, your electricity, your repairs and maintenance, all these are your operating. With the internal controls related to these expenses, that whether there is internal control properly done for the expenses like rent. And how will you see that? You have to see that nature, time and extent of the, you will use your other audit procedures. You will see the rent agreement, you will see the whatever expenses of repairs have been debited in your PL account. Are they properly justified by your documents? So next thing, you will verify the expense with reference to supporting documents and check its calculation. For example, it is your rent debited in your PL. So what will you ask for? You will ask for the rent agreement. Okay. If it is your electricity bill, you will ask for, show me the invoice, show me the bills paid for electricity. Okay. So you are going to verify. Then what will happen? The auditor should also examine whether there is any divergent trend in respect of major items of expenses. For example, your electricity bill. The power bill for the month of September is rupees 50,000 and the electricity bill for the month of December is 1 lakh. Now, you tell me, how is it possible from 50,000 to 1 lakh? September, you use more of air conditioner, you use more of fans, but December, no AC, no fans, still the electricity bill is so much. So these are called divergent trends. So as an auditor, you have to check, why is this divergent trend? You ask for the explanation from the clients, okay, from the bank. Then you perform substantive analytical procedures. Then how will you do it in respect of these expenses like your rent? Okay, what will you say? You will say you assess the reasonableness of expenses by working out the ratio to total expenses. For example, rent paid divided by total operating expenses versus what was this amount in case of previous year. You are taking substantive analytical procedures. We say we are comparing with the previous year. So rent paid divided by total operating expenses, whatever amount, you compare it with the previous year. So this is called substantive analytical procedures. Okay. So I have made DIVs as your mnemonics so that you remember audit for operating expenses is important. It can be asked in your exams. Okay. So number 1 is divergent trends. I stands for internal control. V stand for verification and seeing the calculation, and S is for substantive analytical procedures. Are all these 4 points clear to all of you? Please write to me in the chat box, dear students. Are all these 4 points clear to you all? Okay, good. Now, coming to our next topic, that is audit for provisions and contingencies. Now, you have to check provisions and contingencies regarding advances. So what will you see? Whether classified as standard or NPA. For both of them, you have to see compliance with the circulars. Whatever circulars of the bank state, you have to comply. You will understand how the bank computes the provision on the standards account in NPA. Are the provisioning done correctly or not? You will check for the classification regarding the debts. Okay, classification regarding the doubtful debts like standard, substandard, doubtful, losses. What kind of classification does it fall under? Okay, and then you will obtain detailed breakup of the standard advances as well as NPA loans and agree with the general ledger. you will see whether the general ledger of the bank also have the same criteria and classification as you have made. Okay, so what have you to see in case of advances? Compliance with the circulars, see how the computation of provisions has been done, classification on sample basis. Let's take up one account and see how is it classified. Okay, and then you will see whether it agrees with the general balances or not, general ledger of the bank or not. With respect of taxation, you will obtain the tax provision computation made by the bank. You say, okay, just show me the computation, and you verify the items in the debit and credit to PL. For example, if they have debited penalty in the PL account, is it correct? Write to me in the chat box, is it correct? No. Why? Because penalty is never allowed as an expense in your PL. You cannot show penalty, it is disallowed. So all these things you have to verify. Then respect of other expenses, you will see whether provision for other expenses have been examined considering the circumstances. Whatever circumstances were there, are the provision being made for that? Okay. For example, there you will see what was the provision made for the month of March for rent. Okay. For example, provision made for rent to be rent payable, provision made for the month of March is this much. How will you cross check it? You will cross check with the rent agreement. You open the rent agreement and you see whether the provision is made regarding this provision only or not. Okay, so rent agreement will provide for what provision will be made. So that you have to check with the provision made in the books of accounts of the bank. Okay, some other points you have to keep in mind, that whether some assertions like completeness, are the interest provided on all deposits? None of the deposits are left without providing for interest, whether provision for interest made for those deposits or not, because bank has to pay interest. So they have to provide for the same. Then you will examine the completeness of interest accrued on the entire borrowings. Whatever borrowings have been made by the bank, are the interest being accrued for the same? Okay, and then you will also recompute the interest accrual. Okay, you will see whether the interest accrued, is it correctly done or not. You remember your assertions, ICAI ORR. So that recalculation and recomputation, you will recompute the same. Then the rates. Rates are the rates provided as per the internal regulation, RBI, or the agreement with the constituent. Are the interest rate provided same? Any change in the interest rate will be again asked for, inquired for. Then your interest on savings account should be dealt with as per the rules of RBI or the rules of the internal regulations of the bank. Then inter-branch interest, from one branch to another branch, if there is any transfer, the interest should be as per the RBI or the HO guidelines. Let's see what is mentioned here. See, it says audit for provisions and contingencies. As an auditor, you should ensure that compliance for various regulatory requirements for provisioning as contained in the various circulars have been fulfilled. Then, obtain an understanding as to how the bank computes provision, okay, on standards and NPA, and whether the classification of loans and receivables are done as per standard, substandard, doubtful, loss, and non-performing. Then obtain detailed breakup of the standard loans, non-performing loans, and outstanding balance with the general ledger of the bank. Then tax provision. Tax provision, I told you, you will obtain from the bank the provision. Okay, so obtain the tax provision computation from the bank's management and verify that whether the items are debited in the PL and PL debited or credit are as per the norm or not. For example, I gave you the expense, you cannot debit penalty. Penalty is a disallowed expense. Okay. Then other provisions, you will see that it warranting the provisions and adequacy of the same by discussing explanation from the same with the bank management. So are these points clear to all of you? See, there's a chart made. Interest income, other income, I have discussed this. Expenses regarding interest, provision, contingencies, operating expense, like I told you, rent, electricity, all that. Now, disclosure of the prior period items. Since the format of profit and loss of the bank prescribed in Form B under the third schedule, you remember? Form A for the balance sheet, Form B for the PL, okay? Does not specifically provide for the disclosure of the impact of prior period items on the current year's profit and loss. Such disclosure, wherever warranted, may be given. So, as per the bank's will, it can give the disclosure regarding the same. All right. So, now I would like to take up your doubts. Let me see the chat box. Are these provisions clear to all of you, dear students? Please let me know. Please write to me in the chat box, dear students. Are these provisions clear to all of you? I'm waiting for your reply. I'm not getting any replies. Students, are these provisions clear to all of you? You did not understand provisions and contingencies. Okay. Come to provisions and contingencies, Achal. See, it says you have to see to three things in provisions and contingencies. First is for the advances, standard and NPA. Okay. So, for both, you have to see the compliance with the circular. You understand how much the bank has computed the provision on standard assets and NPA. Then you check for the classification on sample basis. Then obtain detailed breakup of standard and NPA of loans and agree with whether they agree with the general ledger or not. This was regarding standard and NPA, that is the advances. So for advances, compliance with the circular, computation, provisioning and classification. This is what you have to see. Then for tax, obtain the tax provision computation. You ask the bank, please give me the computation of the tax that you have done, provisioning. Verify that whether the PL account contains any debit or credit which should not be dealt with. Okay, example I told you, for example, they have debited the penalty. That is disallowed. So that has to be again told to the bank that no, it is disallowed. Then you will see to the other expenses. Other expenses, like any other expense, you will see whether the provision for expenses like your rent, whether they have been provided for or not. Okay. So how will you see? You will see the provision made for the month of March. Year end, March rent provision made. You ask for the rent agreement and then you verify these two, that whether the provision made for the month of March is as per the agreement or not. Achal, is it clear now? Achal, is it clear now? Okay. Anyone else, any other doubt in the provisions that we have done or any other doubt in the chapter as a whole? Students, have you understood or not? Please ask me your doubts. I'm not getting replies from the student. Achal, there was another query of yours. Reversal of income, point number A. Okay, Pooja saying understood. Others, I want to know. Achal, I will take up that. Okay, don't worry, I will take up that. Okay, anyone else, any doubt? So I'm going to take up now the query of Achal. Achal said that the first point in not Achal is my screen visible? Government guaranteed advances where the guarantee means neither invoked or nor repudiated, but regards income recognition purpose. See, you have taken loan from bank worth rupees 1000 CR and it is backed by central government guarantee. They say for more than 90 days, it will still not be paid asset. Why? Because it is guaranteed by central government, provided two conditions are fulfilled, neither invoked nor repudiated. But for income recognition, it will be regarded as NPA. The situation, see, it says it is regarded as NPA for income recognition purpose. That is as per AS 9. You will recognize the income only on realizable basis. Okay. The situation would be different if the advance is guaranteed by state government, where advance to be considered as NPA, even if it is overdue for more than 90 days, for both provisioning and implication. For government, it but it treated as NP. Now, Archer, see, it says any advance, including bills, purchase and discounted, with that at the close of the year, the entire asset accrued and credited will be reversed normally if the same is not realized. This will apply to government guaranteed account also. This is for the purpose of recognizing income. Achal, I would like to take your attention. Achal, please unmute Achal. I want to talk to her directly. Achal?
Yes, ma'am.
There are two things. One is classifying the asset for provision, means you're making classification, NP standard. So they say for classification, you will not classify the income recognition. You will again follow the realization method only. There are two things I shall try to understand. One is setting it as NPA. Okay. One is income recognition. So one is you are taking it as NPA. You are not taking it as NPA and taking it as standard for classification. Why? Because it is backed by central government guarantee. But income recognition is something else. Identification and income recognition are two different points. For the purpose of classification, you will consider it as standard. But for the purpose of income recognition, you will consider it as NPA. And you the income on realization need advances also as per AS 9. Is it now clear, Achal?
Yes, ma'am.
Achal, is it clear? I'm asking Achal.
Ma'am, actually, your voice is continuously breaking.
Still it is breaking.
Now it's fine. Again, it's breaking, ma'am.
To you now.
Yes.
Team, can I have Achal with me? Can Achal reply that whether she has understood or not? Achal, can you reply to me in the chat box, beta, whether you have understood or not?
Yes, ma'am.
Yes. Does any doubt regarding it? Technical team, am I audible?
Yes, ma'am.
Okay. So can I have any other queries from the students, or if they wish to ask something or anything?
Hello, ma'am.
Okay. So is the entire to draw your attention? Yes, the remaining portion you could not view. Is it now visible? See, these are the things that regarding the completeness, regarding the rates, interest, and agencies. One was for standard and NPA, the other was for taxation purpose, and the third one was for regarding other expenses. Now, please able to see? Okay. So, any doubt, please ask. Is everything fine or not? In the absence of the same, I'm a little confused. Now I am confused. Students, is this overall chapter clear to you all? Okay, it is clear. Others also, please reply. Okay. Okay, you do one thing. Get back, see to the entire thing. Whenever we come next, you can again ask your doubts from the same chapter. Okay? Is it fine? Okay. Only Achal is responding. What's wrong with the others? Daksh, Pooja, Khushi. Okay. All right. So, technical team, can we call off for the day? Okay. Uh, see, students, I'm requesting you again. If you have any doubt related to any of the topics from this chapter, we can take it up again in the next session. Okay. So, till then, goodbye. Take care. Good night to all of you. Thank you, technical team. Good night.
Thank you, ma'am.
Recording stopped.